Hello, this is Marco Palmero. I want to talk with you about selling a small business, and I want to share with you some experiences, some feedbacks I collected over time when negotiating with people that wanted to exit their business, but also some of the advice that I share with other companies that we were advising when they were looking to exit their own business. As you can see from the background, I'm spending some time in the mountains, and I think it's the appropriate time to kind of have a deep dive on this concept of exiting a small business. And I feel it is important to have a long conversation around it because many times small business deals are looked at as a very technical process. Well, in reality, they're the exact opposite. They're a very emotional process that people need to go through. And so hopefully I can share some insights that sellers may want to consider before actually taking that leap. And as I said, I'm going to be sharing the experiences I had when I was negotiating with sellers myself because I was interested in buying their own company, or also some of the advice I gave to companies that we were advising on the sales side, so to speak. So fundamentally, if you are a business owner looking to potentially sell your own company, or you thought about the idea of exiting the business, I think this video can add quite a lot of value to you. And it can do that specifically because we're not going to be talking about the technical side too much. This is something that a lot of professionals can do much better than me, honestly. But the technical side is just one piece of a deal, especially of a small business deal. And sometimes professionals, accountant, lawyers, and people like that don't really grasp the emotional side of a deal because they're very used to do big size transactions where everybody is acting in a very logical way. But in reality, when we go down to small transactions, people are not really behaving in the same manner. And if you are a small business owner, chances are you build the company that you currently own from scratch. You put your entire life into it or part of your life into it. And now, even though you might realize that selling it is a good idea, you're still struggling mentally getting through some of the challenges that you might face throughout the process. So hopefully what I'm going to share can help you with that. And I think it all comes down with it all starts actually with one fundamental question, which is, what is it that you want? And it might sound like a very obvious question, right? But it is not, because many times people feel that it is a time for them to sell their business for a variety of reasons, and they get influenced by outside factors, but they don't actually make a deep dive on what is it that they really want and whether or not the sale of the business is actually something they want to do and they're 100% committed in doing. And that's one of the reasons why a lot of them pull out of the deal in the middle or right at the finish line because they're not mentally committed into that particular transaction. And so before you actually invest time, money, in effort into trying to sell your business, it is really important to clarify what is that you want. Do you really want to sell the business, or you're just struggling, or you just want to get rid of a problem, or many other things that might go into your head, which of course I cannot decipher right now. I think it is really important for small business owners to understand what is it they want to get out of this transition, which is an important thing, and it is certainly a huge change for their life and their career. And once you have a better feeling of why you want to exit this business and what you want out of this transaction, then all the technical side of things, the technical aspects, so to speak, become a lot easier, because you have sort of like a goal that you wish to accomplish, and the obstacles that you're going to face, because there will be obstacles in the process, are going to be less hard to overcome. And so what is it that you want? I mean, do you really feel is the right time to sell your business? Or maybe you're just trying to sell the business to avoid problems, or because somebody else is making you believe it is the right choice. Now, I'm not trying to say that you should not sell your business if you're really convinced in exiting that company that you created. But the point is, it is something that you should really want, and you should be crystal clear about what is it that you want out of the transaction. Because if you're not clear about that, buyers will clearly see through that, and they're going to leverage that point or that kind of like element against you. And I can, say that with confidence, because we have seen many people looking to sell their business pitch us the idea, and we were able to spot clearly the ones that had a clear idea of what they wanted, and others that were just kicking the tires or trying to entertain an idea they didn't really, they weren't committed into. So what is it that you want? Now, why is it that you want this specific outcome? Now, there are certainly a variety of reasons why you might want to sell a business. You might want to retire. You might want to pursue other interests. You might have desire to, do something else with your family, or maybe you don't have a clear transition for your business because the next generation, your child or your family, doesn't want to take over the business. So the whys are really infinite here, and I'm not going to dive into each one of them separately. But what is it that you want, and why is it that you want it, are actually the key, the kind of like the pillars of the sale process. And it might sound like a very psychological discussion that we're having, but in reality, without these answers, it is very hard to get to the finish line for a transaction. I've seen that myself. A lot of people that wanted to sell their company, but they didn't have a clear understanding of the ideal outcome, ended up with an outcome that wasn't ideal, and they weren't ready to pull the trigger on that. And that, of course, compromised the relationship with buyers and also make them waste tons of time. So why is it that you want to do this? And are you prepared to go through some of the obstacles that you're going to face? Now, I think that kind of leads me to another point, which is, what are you prepared to give up? And it might sound weird for me to say this, but I think every business deal is a trade-off, and buyers and sellers will always try to get the most out of the deal, and rightfully so. But every side should be prepared to give up something in order to get something. And you, as a seller, should be prepared to know what is it that you're prepared to give up. It might be a transition period that you're going to accept, where you're going to spend some time with the new ownership to help them train the staff and transition the business. Or it might be some sort of deferred consideration, where you're not going to collect all the money up front, but you're going to get a higher purchase price in return. It might be, I don't know, the fact that you're not going to be able to get the exact amount of money that you want, but you might get very favorable terms for a deal. There are really a variety of things that, a lot of variables, I should say, that you want to consider. And some of them are going to be more important to you as a seller. Some of them are going to be less important. And so it's important to create a priority list and then decide which ones you are your non-negotiable, so to speak, and which ones are more negotiable to some respect. I can assure you that buyers will have the exact same, checklist in mind, and the moment you're able to, bridge between the two, then your chances of making a deal are going to increase dramatically. So I think that there's a story that I can tell you about this that can potentially help in understanding this concept. There was a person that approached us for selling their company. And in this particular case, we were not advising them. We were not doing any coaching or consulting on their behalf, but he approached us to buy their business directly. So in that case, we were looking at this opportunity as buyers. And what he said to us was, I have this company that is relatively new, and I have some family problems, personal problems, so to speak, that I wish to solve and that I wish to take care of. And I'm not really into this business anymore. So I would like to exit it as soon as possible and then focus all my attention on this particular life problem that I'm facing. So as you can clearly see, this person had I would say a very strong motivation for exiting this company, and time was really a concern for him. So in his priority list, the time for execution was probably number one. And based on the questions that we asked him, we understood that was actually the case. And so time was his priority. Terms of the deal were coming probably at the bottom. In price, it was probably in the middle in terms of priority. So we thought we could give him a very quick exit by structuring the deal in a very creative manner, where he would finance part of the deal, if not the entire deal, depending on how much money he wanted out of the transaction, and then pursue this, life change that he was going through, without having to worry too much about this sale process. And so we presented the idea to him. And sadly, the person was not really open to give up anything. So he wanted to do a deal quickly. He wanted to do a deal at his own terms. And he wanted to do a deal at his own price. So fundamentally, he wasn't prepared to give up anything. And you wanted all. You wanted all. That, of course, presented a huge challenge for us as a buyer, but for any buyer, really. And it was something that brought us to a stall. And I think it was interesting to see that as the deal was not going forward for this particular reason, the guy kept trying to convince us of the validity of what he was saying and the fact that the business was worth at X amount of dollars, and he didn't want to really accept any type of pricing structure. He just wanted to be clean, have a clear cut, and then go out. Now the problem with this was that, of course, he wasn't prepared to give up anything. And what happened was exactly what I was predicting and what I said to him. Fundamentally, 12 months later, the business was still available for sale, and we, became aware of that through our network because other people asked us about the deal and asked us our opinion about the deal. And interestingly enough, the transaction was priced at about half what the guy was asking us in the first place. In 12 months had passed. So fundamentally, what happened was that the guy was not prepared to give up anything, and he ended up losing everything because the business was still available for sale, so not sold. It was now available for half the price. The guy had lost 12 months. And in addition to that, it was hard for anybody to really become interested in that asset, because if the guy was as stubborn as it was with us in the beginning, chances are nobody else would touch a deal like that. Now, I think that he ultimately ended up selling that business for way less than it was worth, and chances are he sold it 18 months later. But as you can clearly see, that person ended up losing a lot more by being stubborn and not being willing to give up anything. And that caused him a lot of pain. I'm quite sure about that. Instead, if he had decided clearly what was his priority from the very beginning, what he wanted to accomplish and why, then he would have had the ability to give up something in order to get something else. And chances are he would have gotten probably more money, not immediately, sure, but over a certain period of time, and at least the problem would have been solved right then, instead of just wasting 18 months, trying to get the most out of that deal that clearly nobody actually was interested in buying. And so I think, what is it that you're willing to give up is very, very important for you to understand. Those are questions that probably an accountant will not ask you, but they're very important, because the moment you know that, you sit down at a negotiation table with more confidence, and you know how to kind of like navigate the questions in the asks of any buyer fundamentally. Now, assuming you have clarity on these 3 points, now, when is it that you want to do this thing? How is it that you want to do it? Here we're getting into the technical side of the deal. But I feel it is important to clarify that it is mandatory for you to understand if the business is really ready to be sold. And I'm going to tell you a story that can potentially clarify what I'm saying here. We helped a company based in the US, an online business, sell the company. On this particular occasion, we were the advisors or the consultants in that particular case, and we were providing them support on a monthly basis over a series of sessions on the strategic side of things, helping the person understand what were the good steps he needed to take in order to exit this business, what kind of advisor he needed to hire on the accounting and legal side in order to make that deal successful, how to spot the right buyer and make sure you could get the right deal out of them, and all these sort of things. So we were helping them with this. And as we were going through a couple of sessions, it became evident that the business was not prepared. The business was not ready to be sold. And if the person were to go through the sale process at that exact moment, he would have gotten probably half of what the business was worth. It was not a big business. We were talking probably about 2 million in total transaction size, but the guy would have gotten probably 1 million only. And there were many reasons for that. I can name a few, like the customer acquisition channels were not diversified. They had only one customer acquisition channel. The business was heavily relying on the owner, so on him, to operate. In addition to that, this online business didn't have a lot of recurring element into it. So these purchases were just one-off. They didn't have strong back-end in upsells to make customers either recurring customers or repeat customers, so to speak. So all these problems were evident in, despite the fact the business was profitable and that could be a good exit for this particular person, it became evident that it wouldn't be a good deal for him, because all these challenges would have come out during due diligence, and any buyer would have used these as an opportunity to knock the price down. So fundamentally, what we did with him was reframe his whole idea about exiting the business, because the guy was already thinking of himself as a millionaire or as $1 million exit. And we said to him, why don't you consider the idea of waiting 12 months and restructuring the business, hiring X, Y, and Z advisor, so that you can then maximize the value of this exit and then be really prepared to do that, instead of just trying to sell it, but then ending up with half of the value that you could have gotten. So thankfully, this person was open to the idea. He accepted our suggestion, and throughout some referrals and introductions, he was able to hire and work with the right advisors that helped him, one, set up multiple customer acquisition channels to diversify the inflow of leads and clients for his business, then separate the business from himself, create a strong team that could handle the day-to-day without him being around, closing the sales, handling the back office, and doing all this sorts of stuff. So ultimately, he was just taking care of accounting and checking the income probably 2-3 hours a week, so give or take. And that is basically part of the work that we did with him, and that enabled the person to then exit the business 12 months later for the right pricing, the right amount of money that the company was worth. And that was a huge accomplishment, because it is a testament of this person's patience. And of course, I'm not mentioning the name because these deals are quite confidential, and as I'm sure you can imagine, this person wouldn't want me to share on a video the dynamics of the deal or what kind of company got sold to whatever person. So the point is, throughout accurate knowledge and the right understanding of the deal itself, this seller was able to make the right decision and then maximize the value of his exit. And I think what helped him, other than the support that we provided him, was realize the fact that we were buyers ourselves. And so what we gave him as additional advice was not only the regular consulting or coaching work that you might expect from another person, but it was also some real life feedback of somebody that has sat on the other side of the table. And so some of the questions that we asked them were, look, if we were the buyer, we would ask you this question, and this question. Would you be ready to answer these in X, Y, and Z matter? Because if you aren't, you're going to be in trouble. And these people are going to leverage it heavily against you to knock this price down and get the most out of this deal. So he was very thankful for that. And I can see the reasons, because of course he was able, through patience and understanding, to get double the money out of that business, which is not a bad thing. Now, I think this is some of the reasoning that a lot of people need to go through, because in some cases, again, the want and the why are not clear, and people want to exit a business fast, maybe because they're facing some challenge, maybe because they're short of cash, maybe because they're afraid of what's going to happen, maybe because they want to get rid of a problem. All these challenges might happen, but that doesn't mean that selling a business is the right choice for you. As a matter of fact, all the reasons I just mentioned are the wrong ones for exiting a business. my experience and the experience of my partners has showed that you should really sell a business when it's doing very well. And I know it might sound counterintuitive, but it is actually the truth, because buyers are going to be more open to buy a business that is prosperous and doing well. They're going to be more willing to pay premium prices, more willing to accommodate good terms for you, and you're going to have better leverage fundamentally. So all these aspects should be something that you really want to consider. And I think that kind of brings me to the concept of paradigm shift, which is a huge change in mentality that a lot of sellers need to go through. So if you're a business owner and you're thinking about exiting a business, I think that this point can really drive this whole conversation home. Many people think of an exit as a way to, again, either solve a problem or solve some kind of situation that they're not aware of how to solve in some other way. And it is actually the wrong way to look at a business sale or a business deal in general. I think many times when people spend a lot of time in the business, maybe they build it from scratch and they spend 20, 30, maybe even 40 years into it, they lose sight of what is actually the ultimate objective. And if you're planning on passing the business through the next generation, there's nothing wrong with it, right? Your objective becomes transitioning the business to the new generation. But if you don't have that clear path in front of you, then people just believe that something magical is going to happen that is going to enable them to cash in on this company that they created. Well, in reality, unless you have a well-prepared plan in front of you, the only risk you're facing and that you're gonna face is that nobody is gonna want the business. You're gonna be forced to sell it when it is not the right time to sell it, and maybe nobody would want it, and so you're gonna risk keeping this thing when you wouldn't want to sell it and do something else. So the point I want to get to is the paradigm shift you need to make is that every time you got a business, independently of how you currently think and how you currently behave about this business, you should have a clear exit strategy ahead of you or ready to be put into action and executed. And the reason why I'm saying this is because you never know what's going to happen in your life. You never know how your mindset is going to change, or what your personal life, how your personal life is going to evolve. In having this option that is available to you is going to be beneficial in so many ways, because the moment you decide that you want to exit and you have everything ready, then you can pursue that path with confidence without having to make all these mistakes or these adjustments that I just mentioned to you in the case, and maybe spend 12, 24 months in a business restructuring, trying to make it good before you actually exit. So the paradigm shift that, again, we want to make is, first, we got to be prepared always. And also, we want to be prepared to sell the business when it's very, very good, when it's very attractive. To some respect, we want to be ready to sell the business when we don't want to sell it. So when the business becomes so good, you would rather keep it, maybe it's the right time to think about selling it. If that is something that you're planning to do, sometime in the future, because that will be the peak opportunity that you've been looking for. And as I said before, buyers will look likely at your company. They'll be more favorable towards you, so you're going to have a huge advantage. And we've done some work with people, advising them on how to structure these things. As I mentioned in the previous case, some of the restructuring, or how to hire the right advisors, how to find the right buyers, how to mentally reframe their strategy so that they know what's going to happen every step of the way, and they know how to handle these steps. And that has been quite interesting as a process, because again, being buyers ourselves, we also provide additional insights on how to be ready to address certain questions and problems that you might face. And we can kind of like do some, I don't want to say some role play, but that is sort of like what we do, right? Being your on your corner, so to speak, help you understand how buyers think, and how you can prepare to navigate these challenges correctly. And ultimately, once you have clarity in your mind of what is that you want, why is it that you want it, you make this paradigm shift from wanting to get rid of a problem to I want to maximize the opportunity that I got, and I want to be ready to pull the trigger on this opportunity at any point in time without delaying this process. Then you're in a very comfortable position, because you know that it doesn't matter what's going to happen in the future. You're going to have all the options available to you, and you're going to be ready to potentially exit this business if the opportunity presents itself, or if you decide it's time for you to go out. And so keeping your options open really becomes instrumental, because I'm telling you, I've seen so many deals that didn't go through for one simple reason. The seller was so motivated in exiting this business. He wanted to get rid of it. He wanted to retire. He wanted to relocate to another country. But he wouldn't compromise on anything, because he had a picture in his head of how much the business was worth. And as a consequence, buyers were not looking at a company in that way. And so the guy didn't prepare himself and the business to be sold at a certain price. He needed to accept what the market was offering, and he wasn't ready to do that. And so he ended up not selling the business. And that happened time and time again, because there was lack of preparation. And so then there was a mismatch between pricing in the market and expectation from the seller. So once you make these adjustments mentally, which are really mental adjustments, there's nothing technical about it, but the technical side is really straightforward, because if you hire the right advisors, the right legal team, and the right accounting team, you got nothing to worry about. They're going to take care of all of that for you, really. You're just going to agree on what they do, but the technical aspect of executing a deal is handled by somebody else. It's really the mental part that it plays a huge role in executing a small deal. And this concept of reframing also the expectation is very important, because as I mentioned in the very beginning, selling a small business is an emotional process. But not all people are going to look at this transaction emotionally. And it might sound hard for me to say this to you if you are a small business owner, but you are probably going to be the only one emotionally involved in the deal, because your accountant and lawyers, of course, are going to act very logically because they want to represent you in the best possible way. But also the buyers are going to be very logical about a deal, and they're going to look at the numbers and what's on paper, plain and vanilla, without stories, without glossy pictures, and without all the emotional attachment that you might have to that particular company. And you got to realize that is going to be the case. So it's not something that you can change. It's just something that you can mitigate. And so my framework for that is that the moment you start to realize you're going to be the one emotionally involved in the deal, you got to understand also what are the elements that can hurt you and how you can prevent buyers or other people from hurting you that way. And I think being very realistic about what the business is all about is important. I know that the emotional attachment to that particular company goes beyond figures, facts, and assets, so to speak. But the problem is everybody else is going to look at things exactly this way. So black and white, how much are you generating? How much are you profiting? So on and so forth. So how do you separate your emotion from that? Well, as I mentioned, preparation is key, because the interesting thing is that when you're prepared to sell a business at any point in time, then you really dictate fundamentally what you can expect from this business. You can have a level of foresight, so to speak, because if you're ready to sell the business at any point in time, the market might fluctuate and people might be prepared to pay more or less for a certain company or a certain industry at any given time. So you're not really desperate to exit this company. You can wait and see when the market is prepared to pay the amount of money that you want out of this asset, and then sell the business at that point in time. So it gives you this flexibility and opening because you prepared before, and so now you're not in a hurry and you're not forced to comply to certain parameters that are now the market, for a certain asset. But you can just wait and see, and then when the opportunity presents itself, exit the business. Now, of course, I'm not saying that you can just wait forever because you have crazy expectations for your company, because if you're just nuts and you're just expecting to exit your business at, I don't know, 20 times EBITDA, you're not going to get it done in any year or in any market. So we got to be realistic, but provided we're realistic, we understand that the markets fluctuate. And so for 2, 3, 4 years in a row, certain companies might trade at a certain multiple. Then there might be a spike in interest. These companies might go up in value. So you might be able to trade this business at, 6, 7, 8 times. It just really depends. There are industries that are very hot. Example, cybersecurity, data centers. As I'm recording this video, and we're at the beginning of 2025. So those are hot industries that can trade at huge multiples. There are others that are less sexy. They're less palatable. Now, of course, each market, fluctuates. And we want to maintain a certain level of realism and be realistic about it. But provided we understand that we're not gonna, take an industry that generally trades between 3 and 7 and ask for 15, but provided we're able to play within that range, we know that if the market is now paying 3 to 5, if we wait for an upcycle, we might get 6 or 7, which is good. And of course, if we prepare beforehand, it becomes much easier to wait and spot this opportunity. Instead, if we just rush the process and we just need to get this thing done as soon as humanly possible, we're just gonna get what the market has to offer. And unfortunately, when people feel that you're desperate about it, they're also gonna knock the price down even more. And that's something that they can feel quite easily. So the moment you are prepared, you can expect to exit the business at a higher multiple, and you're going to be hurt emotionally a lot less, because unless you are, again, nuts or crazy and you want the moon for a business that simply isn't worth that much, then you can expect to collect more money for that exit compared to, what you would have gotten just by trying to get rid of it as soon as humanly possible. So those are some considerations that I thought were worth mentioning for people looking to sell their business or just thinking about selling the business. And keep in mind, I'm sharing these thoughts because I'm working with companies that wish to sell either on a consultancy basis or through coaching programs. And I've also been on the other side of the table. So I've looked at companies that I wanted to buy for our own business. And so I can share some of the insights that buyers may be looking into when acquiring a specific assets. And so there's I would say, a mixture of two things that really delivers an optimal outcome for people that are looking to sell their business, because they can see what the perspective of the other side would be, and at the same time they can get guidance and understand clearly what is it that they don't know. Because the ultimate question is, how much is costing you not knowing what you don't know? Because most sellers are just struggling with this issue. They never been through the process. They don't know how to handle it. And the moment they hire an accountant or a lawyer, these people are going to be very good at what they do, certainly, but they're going to approach the deal in a very logical manner. Getting guidance on the strategic side and emotional side becomes very key. And that is something that we have done for companies around the world, mostly small businesses again. And we do that in a variety of industries. And I think if you are in the process of selling the business, or if you're thinking about selling the business, really getting these questions down. There are many more that I could add to this video, but I'm not gonna continue this, otherwise it will be just too long, maybe another time. The point is, the emotional side and the technical side comes after. The emotional side and the real motivations, the motivators for exiting a business come first. And once you have those nailed down, then the technical aspect, I don't want to say is relatively easy, because there's still quite a few steps that you need to go through. But with the right advice and the right people representing you, you're going to have less issues. But it's really a psychological game, a paradigm shift that you want to make. This is just my 2 cents about this, because I've reviewed thousands of businesses for sale, and I've helped also quite a few buyers get their business straight up before they were actually ready to sell it. So hopefully it adds some value to you. And yeah,